What is going on YouTube? My name is Lucas. Today, I'm going to continue the series. This will be episode number 4 of Investing 101. Today's topic is going to be exchange traded funds, or ETFs. So if you're interested in finding out what these are, stay tuned after this. I'm going to start this off with exactly that, explaining what an exchange traded fund is, or an ETF. So what it is basically it's a group of securities that is housed inside this fund, but one key distinct factor is that it's traded like a stock. ETFs follow a form of an index, and I'll give you an example of what I mean by that later on. ETFs can also invest into a sector. And to give you an example of that would be technology. So, housed inside this exchange traded fund are going to be a series of stocks that are based out of technology. So, there's some form of technology and they're housed in this ETF and it's all related to technology. So, when you invest into this ETF specifically, everything that your money is going to go towards will be some form of technology. That's just one example. Another example could be like utilities. So every stock company that is housed inside the utility ETF would be you would be investing into some form of utility. Exchange traded fund, I would consider this thing like a morphed hybrid. And what I mean by that is that basically it has some similarities to a mutual fund, but it also has some similarities to a stock. Just an individual stock. And so I'm going to go into some detail on how it draws some similarities from both of those to now create the ETF. Rundown of how a mutual fund and an ETF are similar. They both house a series of stocks, bonds, commodities, and they house them in there and they rank them however they rank them. They give them a weight. And basically what it is that it's a series of these companies that you can get at a cheaper price versus getting an individual stock. Where it is similar to an individual stock is that it's traded like a stock. So if I wanted to buy at 8 a.m. and then turn around and sell it at 11 a.m., I can do that. Where with a mutual fund, if I were to purchase that after hours, I would then have to hold it for 90 days so I don't accrue any penalties. To give you another couple comparisons between a mutual fund and an ETF, they both have expense ratios, and if you invest into a series of companies that have dividends, that ETF will more than likely pay you a dividend out if those companies are involved in dividends. The most well-known groups that has ETFs is going to be SPDR. That is SPDR. They have a series of ETFs that include 11 sectors, all the way from communications all the way to utilities. Probably their most popular ETF is going to be SPY, and that's SPY. And what this does is this basically tracks and mimics the S&P 500 index. So, yes, this is going to be a little bit more expensive ETF, but it's going to replicate and follow the S&P 500. There's going to be 5 different types of ETFs. And I'm going to go into some pros and cons of ETFs. There are 5 types of ETFs. Bond, which is going to be bond ETFs. Industry, which is going to be, like I stated earlier, in technology. Commodity could be oil-based companies or anything that involves oil as the commodity. Currency, obviously that's going to be currency. And an inverse ETF is going to replicate, or it's going to be the opposite of an index. Now to the pros and cons of an ETF. To start with the pros, number 1 on the list is going to be access to many stocks across various industries. And this is key. Number 2 on that list is low expense ratios and fewer broker commissions. This is a little bit different than a mutual fund. Number 3 on that list is risk management through diversification. So basically, you're going to be able to create a diversification with this ETF. Now to the dreaded cons. Number 1 on that list is actively managed ETFs have higher fees. So if you get an actively managed ETF, there's a good chance that there's going to be higher fees with that. Number 2 on that list is going to be single industry focused ETFs limit diversification. So if I were to solely focus on technology, I'm not going to be diversified in other stocks. And number 3 on that is lack of liquidity hinders transactions. Hopefully you learned something from this video on what an exchange traded fund is or an ETF. As always, if you like this video, smash that like button. It helps out tremendously. And if you enjoy the content, because I'm going to keep the content flowing, subscribe to the channel. As always, have a good day.